Pharmaceutical companies, including Bristol-Myers and Merck, reported third-quarter earnings earlier this morning. Here with the reaction to the results is one of the most accurate pharma analysts, according to Bloomberg Research. We've been catching in between a very busy conference call-filled morning. That's Tony Butler, analyst at Barclays Capital. Thank you for making time for us on this busy morning. Tony, I want to ask you, Bristol, their earnings were good. Merck, their third quarter profits also up, tripled, in fact. Why are the share prices down?
Great question, Margaret. I wish I had the psyche of the market within my crystal ball. My sense is this. The overall revenues for the pharmaceutical industry have been good. They haven't been great. And while you've made a good point that the companies have exceeded estimates and really have good growth, the reality of having exceeded estimates is primarily because they've controlled cost. And I would suggest that when you look through the landscape, and you alluded to Merck and Bristol, the speed at which they've been reducing SG&A has been better than expected, and hence that's why they've exceeded estimates. But when you think about the top line, it's not because they're necessarily selling products above expectations. They're really in line with expectations. So my sense is the market's saying, wow, it's good, but it's not great.
Well, how much of this is just anticipation of healthcare reform and the noise out of Washington? How real is that, and how much of that is already priced in?
Well, a great deal is priced in. I mean, healthcare overall is underperformed, as you know, and my sense is pharma's been a place where many institutional investors have avoided. However, once that bill is signed, it's just my thought that institutional investors will look around for sectors that have underperformed. Healthcare will be one of them. And they'll see that the pharmaceutical companies won't necessarily be impacted as great as they might have thought going into healthcare reform. You see low valuations, and quite frankly, when you put together the mergers that are upcoming, whether it's Abbott with Solvay, Pfizer with Wyeth, or Merck with Schering, you're actually seeing numbers that are accretive for 2010. I might actually expect a small rally either toward the end of the year or the first part of 2010.
How much of that, when you talk about mergers, you talk about acquisitions, there's a lot of concern about the pipelines of some of these drug giants, that growth is going to have to come by buying up some of these smaller biotechs. How much does Merck gain, though, from sharing that bigger piece that they're buying up right now?
Well, it's a fair question, but think about this. They do have a joint venture with a very large cholesterol franchise, and while that cholesterol franchise has been under pressure, it's roughly $4 billion in total sales. They account for that below the operating line. As you move it above the operating line, you can clearly see that they could increase profitability just on that joint venture. When you think about what Schering brings to the table, they do have some near-term opportunities, an opportunity in schizophrenia, an opportunity as an anesthesia drug, Sugamidex. You also have a cardiovascular product, a late-stage phase 3 product called TRA that could help in the area of coronary arteries or helping coronary artery expansion when somebody's had a heart attack. So near term, there's an opportunity for Merck in their portfolio. Longer term, it's really Merck's portfolio that needs to perform. So it's a nice merger that fits in. I think it's really, though, in the short term, cost control.
How much does this volatile Forex market that we're seeing right now, this dollar weakness, play into your positioning?
That's a great question. In fact, we're seeing the top lines affected, the revenues affected by anywhere between 2% and 4% on a year-over-year basis. You do see that reverse out on the cost of goods line. On an earnings front, for example, Merck reported that in their 90-cent earnings per share for Q3, that they were negatively affected 2% by foreign exchange. So it has had an effect. But let's be very clear: it's not real. We're not really good at forecasting foreign exchange. It has been highly volatile, but we do anticipate that to reverse itself partially in Q4 and certainly in the first half of 2010.
All right. Well, thank you so much for your analysis, for joining us this busy morning. Tony Butler of Barclays Capital.